Absolutely, a very good morning to you, Shrishti. And as you can see, some sort of strength coming back into the markets, because if you look at the way how the Nifty stocks are panning out, only 5 stocks right now on my screen are in the negative territory. So yes, a good day coming in for the markets. Take a look at what Nifty is doing. It's above 19,800 mark in today's trading session. If you look at Nifty Bank, that is actually underperforming the benchmark indices a tad with 4% uptick for Nifty Bank as we speak. Talking about the list of gainers, it's a surprise. You have Wipro that is actually leading the gains when it comes to the Nifty. It's a 3.6% uptick coming in for Wipro. You have Ultratech, Dr. Reddy's, Grasim, HUL are the other set of gainers in trade today. While on the flip side, and losing side of the market, and like I said, only 5 stock or 6 stocks on Nifty are losing. So it's Coal India, SBI Life, HDFC Life, Power Grid, as well as IndusInd Bank that has now slipped into the negative territory. So advanced decline ratio, suffice to say that one is actually very much in the favor of the gainers as of now. Let's take a look at the sectoral indices then. And yes, if you look at the PSU Bank Index, mild bit of weakness actually trickling in for the PSU Bank Index at the day's lowest point. That is the only sector that is in the negative territory. And if you look at the gaining end, then it is the Realty Index once again roaring in trade. You have small cap index, it's up about 1%, and so is the mid cap index. So that's the way how the markets are looking like at this point in time, Shrishti. But let's not forget, today is a very, very big day, given the fact that we are going to officially kickstart the Q2 earnings season with TCS.
Yes, earnings as well as buyback announcement will be the key to watch for TCS. But in this earnings season, which are some of the stocks that you need to be watching out for in terms of which could see the biggest gain in terms of profit sequentially, and which could actually be impacted in terms of decline as well. So let's try and find out that list, and Soumeet Sarkar is here in the studios to tell us all the counters that are in focus. Take it away, Soumeet.
Well, we have got this list from the Bloomberg terminal. What we have done is the only filter that we applied here was that there has to be at least 10 analysts covering that stock. And top of the list that we have is Greenply, which is expected to report on consolidated net profit of close to 20 odd crore rupees. Now, the jump in net profit for Greenply is the highest because Q1 numbers were impacted owing to a maintenance shutdown, higher raw material prices, and because of the Gabon impact and lower demand. When it comes to UPL, the profits are expected to jump up to around 546 odd crore rupees on the back of improving prices and improving demand supply scenario globally. For healthcare global, it's the better revenue per bed, better occupancy ratio, and end of one-off consultancy charges that they provided for in the first quarter of FY24. When it comes to Prince Pipe, the numbers are expected to be aided on the back of higher volume and higher prices. When it comes to Shobha, it's on the back of highest ever pre-sales number that the company reported in the second quarter, and also on the back of strong bookings that the company has been seeing. And lastly, when it comes to KC International, that stock is expected to benefit on the back of moderating RM prices and higher sales, which would aid the numbers. Apart from that, there is Tata Steel's, Thermax, Brigade, and Vedanta also in the list, which could see the highest jump when it comes to their net profit on a sequential basis. Moving on to the companies that are expected to report the highest drop in their net profit number on a sequential basis. Now, two companies on the list are Amber and Indigo. Now, both these companies reported solid profits in the first quarter, but in the second quarter, both these companies are expected to report a loss. For Amber, it's because Q2 is seasonally weak, hence a lower sales would result into losses. And for Indigo, it's weaker air traffic, higher crude oil prices, which will impact the cost side of the company, and lower ticket prices, which will again impact the revenue side of the financials for the company. When it comes to Sudarshan Chemicals, it's because of weak demand for paints, plastic, and packaging material, which would weigh on the volumes of the company. When it comes to cement companies like Nuvoco Vistas and Shree Cement, it's lower cement prices, lower demand because Q2 is seasonally weak, and also given the fact that in Q2 raw material prices had inched up, and all these three factors would result into a lower profitability for cement companies. And when it comes to oil marketing companies like HPCL, Indian Oil Corporation, and BPCL, all three companies are on the top of the list because in the second quarter, not only the refining margins were weak, but because of higher crude oil prices, even the marketing margins that the oil marketing companies were earning were on the weaker side. And because of both these factors, all the three oil marketing companies are expected to see a sharper drop in the net profit number in the second quarter on a sequential basis.
All right, thank you so much for that. Actually, Soumit, for it's a very interesting data because when you look at it, at least in the first few top gainers, you can't see any of these nifty companies, and not in
UPL there's no
yeah, apart from UPL, and I think Tata Steel also, I can see that. But even in the Q2 earnings for maximum decline, is mostly all of them that are mostly the ones that are dependent on crude oil prices,
Exactly.
isn't it? That's the
Yeah.
way how it is going to be. But are you geared up for the Q2 earnings season,
Yes,
isn't it?
definitely.
All
Has
right.
to be no choice.
Yeah, no choice, it seems, is what Shrishti is saying. But yes, thank you so much for that number crunching, Soumit, for taking us through this list of stocks that are likely to see maximum upside on a sequential basis, maximum decline on a sequential basis. And this is as per the data crunching that our team of researchers have done via the Bloomberg terminal. But let's bring on board our guests for today and let's ask if they are geared up for that all busy Q2 earnings season and which are the stocks which they are betting on or they expect to see a sharp uptick or a downtick. Very good morning to you, Aditya Agarwala, as well as we have Rajesh Agarwal joining us on the show. Very good morning to both of you. And Rajesh, let me come to you. You heard hopefully what Soumit had to talk about, and if you look at the way how the number crunching has been done, given the fact of the number of analysts that are covering a particular stock, if you look at that, the top gainers, what they're expecting a sharp jump in to come in for Greenply, for UPL as well as Healthcare Global actually on a sequential basis. While on the declining end, we are expecting Amber, Indigo as well as Sudarshan Chemicals based on the raw material prices to see some sort of a downtick. Have you done any number crunching? Which sector do you think is likely to outperform in this quarter?
Good morning, Cheryl, Srishti, Aditya. We are all expecting numbers in the starting from today, of course, with TCS kicking in. And as per our in-house calculation, what we have found out that there might be around 20 to 23% jump in Nifty 50 companies taken as a whole, with outperformance coming from BFSI, auto, pharma, and of course, media companies. Auto, because of the low base, and media companies because of a better quarter due to a lot of sporting events where the G20 was there, political ad spends have gone up. So these things give an indication that media companies are going to do well. As far as valuations are concerned, I think they are in line with the fundamentals. And even after this run-up, I don't think there is any kind of bubble or something like that. Q2 numbers mostly would be in line with Q1. And what would be most important to watch out what would be commentary of the second half of the year. Because what the management says or comments on the second half would be more focused on rather than going for Q2, because as I said, Q1 and Q2 would be in line, nothing very surprising or on the positive side or negative side. Key positive for Q2 and Q3, I would say, would be the low base because of high inflation last year. And hence, we don't find anything to be highly negative in the forthcoming numbers. Rather, we are positive that around 20 to 22% upside would be there in the Nifty earnings.
Those are the stocks that, those are the sectors rather that Rajesh is looking out for. Auto companies will also be in focus. But Aditya, coming to you now, what's your take on the Q2 earnings? Any stock that is on your radar that that could likely see a run up in the short term? And what's your take on TCS specifically? How are the charts panning out to be just before the earnings?
Good morning, Srishti. Good morning, Cheryl. Good morning, Rajesh. Thanks for having the show. Oh, I believe looking at the multiple sectors, I did scan a lot of sectors, and consumer discretionary is something which clearly stands out for me, given the fact that the earnings, that the festive season is also on, and you will see a higher spending. We are witnessing that kind of a trend for past few quarters as well, a higher spending habit from individuals. And if I take a look at the BSE consumer durable chart, it is clearly broken out from a good consolidation phase. So Srishti had entered into a broad consolidation phase. And if you take a look at the graph of the consumer durables BSE, it's clearly broken out from that consolidation. So it is poised to head higher from current levels. And I see a lot of stocks within that consumer durables basket, which can actually start to outperform. To name a few, there are a few stocks which definitely stand out from the basket, and I definitely like them. Some of these have been recommended to our clients as well. So the first stock that definitely stands out to me is DMart. The stock did witness a significant correction recently, and now it's formed a base, and from there it's inching higher. So at current levels, it definitely makes room for a long trade. Risk to reward is in favor of going long in the stock. Chart setup is also very interesting, Srishti. So at current levels, one can look to go long for a target of 4100 on DMart, and I believe there is a decent money making opportunity here. Second stock to talk about would be Tata Consumer. That too looks very attractive to me on the charts. And then again, stock had entered into a consolidation phase, and now it's broken out from that consolidation. And the kind of setup that the chart is showing, it looks very promising. And wouldn't be surprised if stock actually tests levels of 1100 for 1150 on the upside in the next few months. This is second stock which definitely stands out for me. The third stock in my list is definitely another consumer durable, which is McDowell's. If you take a look at again the setup of McDowell's United Spirits has been phenomenal, and I believe stock has further legs on the upside. Again, targets out here could be in the range of 1150 to about 1200. And the final stock history has to be from the FMCG space, and look at Colgate Palmolive. The way the stock has moved in the recent weeks, it has clearly outperformed the entire FMCG basket and is broken out from the narrow consolidation phase again. So targets out here could be in the range of 2100 to 2200. So these are the top four stocks, Srishti, from the consumer durable space, which I am banking on for this quarter. And this entire space, I believe, should continue to outperform and see a decent upside. Now talking about TCS, whose numbers are due, I'm a little outbeat on the stock and the entire IT pack. So to say, we have seen a decent up move in the mid cap IT space. I believe it's time that the large cap IT space takes leadership, and TCS has to be the top within that and within that space. So at current levels, definitely looks very promising. Though I'm not too sure what the numbers could be. I believe there could be an upside surprise in the numbers. Commentary will be important. I'm looking at a target of 3800 on TCS on the upside, with a decent support on the downside at 3550. Stock definitely is poised for higher levels. I would not trade the stock at the moment. Maybe if I see a bit of a correction, add it onto the portfolio closer to about 3550, 3600, and look for a target of 3800 on the upside.
So that's a view coming in from Aditya, especially primarily he's betting big on the consumer durable counters. So it's Avenue Supermart, Tata Consumer, you have United Spirits, as well as Colgate that he's liking. And let's not forget, Srishti, actually this morning you had a source-based news that had hit the wire agency, given the fact that they're saying the government is weighing options to go ahead and raise annual direct cash transfer to farmers to about 8,000 from 6,000. So that also, which means that will fuel in the consumption demand as well. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere.